Okay, and we are back, and today I'm having one of those shy moments where I'm just gonna be, just talking to you today. So, the reason we're here today is about the rules of money. Is your money working for you, or are you working too hard for your money? Let me ask you something. You wake up early, you work hard, you pay bills, you save something if you can, but at the end of the month, is your money doing anything once it gets to your hands? That's the main question that I want you to answer. Okay? Or does it just sit there, get taxed, lose value, or disappear? Because a lot of people are working hard for money, but very few people ever stop and ask, is my money working for me? And that changes everything, guys. So we're going to talk about how does it work. Money has rules. Okay? Money is emotional for people. People think money is random, but it isn't. Money follows rules. And if you do not know the rules, money leaks. Yes or no? I would say money flies. If you don't know the rules, money flies. Okay? So let's keep talking about how this works. Okay? Because it is obvious that if you do not know the rules, money leaks. So, this is one rule that is simple: money must have a job. Yes, money must have a job. Okay? So, we're going to show you how this works. Okay? And so, let me just share here. And if you have any question, please let me know because it's important. Most people are actually struggling right now. Okay? So, what is our vision? It's helping people to achieve the life of their dreams. That's the vision. Okay? That's the vision, guys. Um, and so we have the power of choice with all these companies and all these things that we know how to do. So this is the number one rule that I want you guys to understand. And it's called the rule of 72. Okay? The rule of 72 states that the higher the percentage of interest, the faster your money doubles. So as you see, 1% will take 72 years to double. So 20, so that's why you see that the difference in the time, right? 6% will take 12 years to double. 12% will take 6 years to double. Is your money working for you is the question that I'm going to say. Because like I said, money must have a job. Every dollar should know where it belongs. Some money should protect you. Some money should stay liquid. Some money should grow. Some money should prepare for taxes later. Which right now, you guys know about that because we're like right there before taxes time. We got 11 days specifically before everybody has to pay the piper. Before everybody has to pay the piper. And I will not say everybody, mostly everybody, because again, depending on what you do with your money is what happens with taxes or not in the future, right? Okay, go back here. So, but many people put everything in one place and hope for the best. Okay, so as you see, the higher the percentage, the higher the interest, the faster you double your money. And that's what a lot of people don't understand. And that's why they keep working and working and working until they die. Because if your money is not working for you, it's working what? Against you. So how does your money grow? Okay? There's three ways in the world economy that you can actually grow your money. For example, if you have a fixed income, right? And you have $100,000 in your bank and they're paying you 1%, right? You have $100,000 in your bank. Multiplied by 0.01, that's $1,000. That's a fixed interest of 1%. That's what fixed means. Then we got the variable, where the market goes up and the market goes down, and we got your stock, I mean, where you got your crypto, and then we got your 401ks, okay, and your right, and then we got a combination of both called index. So the Roth IRA, the 401k, the stocks and crypto fall here. Okay? And then we got index. So basically, index is when the market goes up, it locks in the growth and then it stays there if the market goes down. This is protection. Okay? So the first rule is this: if it sits still too long, inflation eats it. That's why savers are losers. Money sitting in one place too long gets weaker. If your money is sitting somewhere earning almost nothing, like the example that I just gave of somebody that has $100,000 in a bank and they're only getting 1%, that's $1,000 a year that you get only. If your money is sitting someone earning almost nothing, inflation is quietly taking bites out of it every year. That means your dollars may look safe, but they buy less. So the question is not only is your money safe, the question is your money still alive? Because money needs to act. Money needs to walk. And that's why the rule of 72, like I just stated, is one of the most important rules. Let me go back again to where we were before, that you need to understand. So, and how does it work? Because I didn't explain. The rule 72 is one of the easiest money rules in the world. Take 72 divided by your growth rate. That tells you how long money takes to double. So at 1%, 72 divided by 1 is 72. 6%, 72 divided by 6 is 12 years. That means money that was in 12 years. Different rule, different result. That's why where money sit matters. So this is now the reason that we're going back again to where we were, which was here. Okay? So every dollar should answer three questions. How is it growing? Fixed variable index. How will it be taxed? Now, later, or favorably? Can I reach it when life happens? Because life always happens, and Murphy's Law always is knocking at your door. A job changes, a market changes, a health issue appears, a family emergency hits. Money must be able to survive real life. Okay? And this is why, again, How your money grows is important, okay? So, and this is now what is your money doing and where is it sitting? And this is how it's taxed. A lot of people don't understand that depending where your money is how it's taxed. So, as you can see, a sequence of returns risk. And it hurts retirees more than workers. So at age 65, you start with 1.5 million, the market drops to 1.2 million, you withdraw 80,000, now the new balance becomes 1.12. Before recovery even starts, that changes the future fast. And this is the reason why retirees that plan well have money in different buckets. So a lot of people near retirement do not leave everything exposed the same way. So if all you have is a 401k and you're retiring this year and your 401k is 20% down because people are complaining that their 401ks are 20% down, you really will suffer more because you don't have a diversification in your investments. So, like I said, typical idea is one bucket still in market growth, one bucket in protected income, one bucket liquid emergency money. That is why people often compare 401ks, IRAs, index annuities, and LIRPs, life insurance retirement plans. So the real issue is not, do I have 1.5 million? The real issue is how much can I safely use without running out of money? Because a person can have 1.5 million and still feel pressure. If inflation rises, healthcare costs rise, long-term care appears. If you have a long-term care event and you have a heart attack, a stroke, or cancer, or Alzheimer, right? And that requires you to be in custodial care, that's $200,000 and up for the year. And most people need 3 years of long-term care. Taxes hit harder later. So rough retirement income picture, if you have 1.5 million, conservative is $60,000 a year, moderate is $75,000 a year, and aggressive is $90,000 plus yearly, but with more depletion risk. So the simple truth is that 1.5 million in your of investments is strong, but unmanaged taxes and market losses and withdrawals can quietly drain it. A retiree with 1.5 million needs structure, not just balance. Because all you do is having in a 401k and the market crashes, like it has been doing in the last couple of weeks, that's what you're feeling. So the real question is not how much money do you have? The real question is, do you understand what your money is doing while you sleep? Because if money is not moving correctly, time alone does not fix that. The right rule applied early changes everything. So let's keep looking at this. Okay, so we got that. So we have money, wealth, life insurance, how the wealthy use life insurance as a tax-free personal bank to supercharge their savings. So my question to you is, would you rather save your money in the bank or where the banks save their money? Would you rather save your money in the bank or where the banks save their money? And I will say that most people will answer that they want to save their money where the banks save their money. So this is three modern ways that we help families. One is an income protection plan, where families can upgrade all policies to have income replacement plans with living benefits that cover chronic, critical, and terminal ill. Guaranteed income for life is 78 million baby boomers are worried about their money lasting in retirement. We help families have guaranteed income for life. And then lastly, tax-free savings. Taxes will go up in the near future. We help families to save tax-free. So, living benefits are changing lives. That's another thing, because again, the majority of the people end up needing long-term care, and they don't have the money to actually take care of themselves unless you have a long-term care or a living benefit in a rider in a policy. So now let's go back to the 401k because everybody's freaking out about their 401ks being 20% down. So this is how the 401k works, guys. You is a retirement account, right? When you put money until you're ready to retire. But if you try to get any money before you're 59 and a half, you will get a 10% penalty, 30% federal tax, and 10% state tax. So if you live in the state of New York, as an example, and you get money before you're 59 and a half, that's 50% gone. 50% gone penalty for taking money from your 401k before you're 59 and a half. Horrible, right? Then, if you retire in between, you don't have control of how much money you will have access to. 67, right? If you actually decide that you have all this money in this 401k, right? And you turn 73 years old, the government is going to penalize you for not taking that money out because you've been deferring taxes, you've been pushing the tax monster until you're a retiree. They want their money. So that's why if you don't take the money out of the 401k after you're 73 and retire, they're going to give you a 50% penalty plus taxes. So you're screwed if you get money before 59 and a half. You're screwed if you don't get the money before after 73. So now, do you think that's the best plan for retirement? Because like I said, the only reason that I will take a 401k is because a employer is matching it. That's it. If they match you 5% of your income and you make $3,000 a month, right? That's $1,500 that you can put in there. That will be the only reason for me to do that. Or you have so much disposable income in this moment that you want to not pay taxes in the moment. Okay. So now we have a way of doing a tax-free retirement strategy. Okay. We got protection, we got emergency funds, we got retirement, college funds, and saving. That is called an index universal life. You can have all the stuff and more when you get an index universal life that is well built. Because I know index universal life, if the people don't know how to actually, the person, so basically, that's how the rules of money work. So if you ever want to understand which bucket your money is sitting in right now, message me privately, schedule an appointment, because sometimes one small adjustment changes years of outcome. This is no pressure, just clarity. Okay? So let me put my information here on my phone. Please subscribe now and give me a call to 512-387-2748. 512-387-2748. Because at the end of the day, if your money is not working for you, it's working against you. And unless you want to work until you die, you want to be sure that your money is working for you today. So thank you so much, and I'll see you guys later, and have a happy Easter. April 4th, tonight is Easter of the West. So see you guys later, and God bless. Bye.
Paper trails thicker than a mystery novel. Cash flow ripple make the banks grovel. Phoenix rise both shut with precision. Generational wealth, that's the mission. Legacy locked, key in the safe. Phoenix flying, no time to waste. Stacks on stacks, building the base. Future so bright, can't see the haze. Securitors move, we the pros in the game. Trust airtight, playing no shame. Life insured, annuities grow. Seeds in the ground, now watch them show. Golden wings,